So, good evening channel, happy to have you again watching my videos. This is not gonna be like an academic video. I recommend you go and watch the previous ones because I have many that are like college classes, like lectures, like strategic meetings where I talk about very specific ways of investing and principles that you must know. So go check out my channel, everything is good. And well, not everything, some videos are amazing. I would like one day make like a recommendation of which ones are the best. Today, I decided to make this video more for myself than for you. However, this could be useful if you are interested in anything of the things I offer. Out of my books, I have book publications and many other things. But today I was dressing very well. I have an occasion this evening, so I wanted to take advantage of this and make a video and talk about this. And the subject today is catalog or fund. How should I do business? With a catalog, like most salespeople do, or with a fund? And if you are a logical person and you have experience in this field, probably you already had answered your question. However, thanks to this video, you're going to start understanding which path should I take, should many people take if they are in financial services or working with stocks, publicly traded businesses or privately traded businesses, whatever. There's so many different types of securities and investments, okay? However, I'm not going to go out of the topic today. It's catalog or fund. And I came with this explanation to work with people so they understand how I could work with them and why I don't work in a specific way and why perhaps they don't deserve having me working in a certain way. And the big thing in financial services, which in other words means guy or person, woman, whatever, financial advisor, perhaps a computer that has parameters that filter stocks, somebody or a computer has a stock investment idea, and the thesis is that stock investment idea is undervalued, okay, or it's gonna perform better than normal. So everybody's looking for this information, I guess, and if they are not, after they study a little bit and learn how to manage their savings, they will be interested in this information. So the big question is, when I work with people, should I show them a catalog or simply go to for the path of having a fund and manage a fund, which is what I'm doing right now. Okay, myself, I could make income from commissions. I'm making income when I sell one of my book copies, for example, but my income comes from my fund. Okay, and this is the interesting thing. Because I remember when I was 19 years old, I came to America, to New York City, to work in a sales job. Very low salary, but they offer nice commission deals. And I was like, better than studying at college and law school, which my school was horrible in my country, why not go to America and learn about this country and learn how to sell? And of course, I had some idea of how great America was. And then when I was 19 years old, today I'm 26, going for 27, I went to America and got this sales job, okay? And after that, the catalog could have been better, but, I managed to survive. And then the pandemic hit, okay? Very badly. So that plan was disrupted. And after the pandemic, I remember everybody lost hope. Everybody lost hope about the economy. Nobody in my family wanted to support me. Some people in my family died. And I remember I had my own savings and also some savings my grandparents left me. And I remember I sold everything, and after I paid my plane ticket to come to the US, I was left with $600 in my pocket. And again, working with the same company that was going to give me some income if I could sell products, right? But why I'm saying this, it's not for introducing myself and my humble beginnings, and I'm not so humble as that might seem. I had to take that risk because nobody in my family wanted to support me. Nobody post-pandemic believed that you could just jump into a country and pursue your American dream and make it and all of that, and with so little capital. But the thing is that in that company, I work with a catalog. I had more than 100 products, okay? Which right now I don't even want to sell you because I'm so focused on stocks, which is a much better product for myself and for everybody. Okay, but the interesting thing is that this company had more than 100 products. We have like a catalog of very good beneficial products, good for health, good for so many things, so many benefits. Okay, some more beautiful products that people just bought to be happy. To be honest, sometimes you sell happiness, right? And the thing is that when I sell you stocks and investments, I could take two different paths, if not more. And one path would be to have a catalog. Myself, right now I know more than 10 quality investments in publicly traded companies. Some lately, for example, doubled in price. I have one, I bought it 161, now it's 332. The other one, it was like, I got around 380, and now it's a stock that's trading at 7. You know, it paid like 10% dividends back then. Now with the increase, it only pays 5%, around that in dividends per year. Okay, but the thing is, I could show you a catalog with all the different stocks I offer. You know, I could mention you like in my book. This is no secret. You know, in my book I mentioned my investment in Petrobras, which I bought at 963, got a lot of dividends on the way, and then sold it at 15.11. I could have sold at 16, okay, like other funds did. But what I'm trying to say is that one path is that I could have a catalog with many products, many stocks in this case, okay? And then we transfer the power to you, to the client, and from that catalog, you know, there's gonna be many different stocks. The market isn't working. We're gonna have to use the pink one today. So you have many stocks, and then you go, as a customer, you look at this catalog, and the ones you like the most, you pick them and you invest in them, right? And myself, I put myself the challenge of living out from the commissions you will pay every time you buy a stock package. In the same way, when I sold goods or a product, okay, or a policy or a financing, I got a percentage of that contract, okay? And I was living, when I was 19 years old, I was living under the challenge of living out of that. Okay, but if we have stocks, you can pick one of these stocks, okay? And I put myself the challenge of living from the commission of that, which is a path I don't like to take, and I wouldn't like to take. And if you have some logic and some brains in your mind, and you understand what a fund is, you could start to understand why I will never take this path. But let's say we do this way, right? We put the investment ideas in a catalog. I lose power. I transfer power to you, the customer. And then some of my customers are going to have more power than others because someone, let's say a customer, doesn't even diversify, doesn't even buy the whole package. He buys 50% into investment ideas. And these two ideas were the best ones, and he was right about it. So that guy, that customer, that accredited investor, is going to be the one that's going to grow the most. Perhaps their net worth, or at least that portfolio they have with me, is going to double, go up 80%, perhaps more. Sometimes stocks triple in price. So in matters of a year, months, sometimes 2-3 years, depends. So the thing is that with this setup, we transfer the power from me to you, and I have to live from the commissions, right? And I have to accept the challenge of making a living from this setup, okay? Which is a setup I'm not interested in. And I'm gonna explain you now why I'm not interested in this and why you lose because I'm not interested in this. And you could win in this situation, but you have to be smarter and understand many things that people don't understand, which is how funds work. If you watch one of the previous videos I did, you're going to see this logic I was introducing to you, inviting you to be logical, that if a salesperson, doesn't matter if he's calling you from his home or from his villa in Hawaii or from an office in Wall Street, or perhaps, I don't know, he has family in El Congo, Africa, or in Philippines, or wherever, and he's calling you from there, okay? Because all salesmen, all stock salesmen, or all financial advisors aren't in Wall Street, okay? But if that person has an idea that's gonna triple in price, or more than that, or just double in price, and that person already has $150,000 saved, okay? Why do you think that person is interested in selling this idea to you, okay? Because if that person has $150,000 saved, or as I said, he's even richer than that, he has $150,000 in a separated account, okay, ready to be invested in great ideas, in real estate, in stocks, in whatever he finds. It's a separated account, okay? He's gonna make more income, okay, investing that money into that stock idea, okay? And after 1 year, 2 years, 3 years, when this money doubles, triples, goes up 60%, I don't know, he's gonna make 150K a year. He's gonna make 300K in a year if it triples in price, right? He's gonna make 300K a year in that case, okay? If he has to wait 3 years for that to happen, for the stock to mature, for the investment to mature, okay, he's gonna make 100K a year, okay? So he's already making one of the highest incomes in the world by just grabbing that money and investing it in the idea itself. So this is what I'm doing. This is what I'm trying to tell you, man. I'm not gonna be like the other guys that put a catalog in front of you. And sadly, nowadays people is so stupid that they think that opportunity is gonna present in this format. And it's not. When some people made money partnering with Warren Buffett, for example, they went into a partnership, okay? Okay, Warren Buffett, like myself, he was a door-to-door salesman in many ways. He worked for Coca-Cola when he was very young, right? And he had a catalog, okay? But after that, he didn't even have a catalog again. His way of selling was different, okay? The way people benefited from his investment ideas was going into a partnership, which in other words is a fund, where the person that has this catalog is investing the money in these stock ideas, okay, which is what I'm doing. I don't make a living from saying hi to you, winning your trust, and then after that, like salesmen do, pulling up my catalog and tempting you to buy this product or this product of my catalog, or getting excited about this gold mine I know that is doing great and is extracting many gold, many tons of gold, and it's expanding to multiple, I don't know, more countries, and getting rights in more land and things like that, okay? The structure of this is there is a fund, and this fund has rules, and this fund has regulations, and this fund has lawyers protecting you, so you get rights to, for example, withdraw your money whenever you want. Sometimes these funds are so serious that the manager, like myself, sometimes we make an agreement with you that you will allow me to lock up the money for 2 years so I can work with it, okay? And let it grow, okay? Because I'm not perfect. I don't always buy the stock in the lowest point. If I were capable of doing that, nobody is capable of doing that. I was buying on the dip and selling when it goes up and buying again in the dip. That doesn't exist, okay? But what I'm saying is a fund has many rules. And after those 2 years pass, or perhaps I give you rights in 2 months to withdraw your money if you want, you just withdraw. You have the rights to do so. There's laws, there's regulations, and you can take the decision of making the fund in a country that's serious and have a legal system that supports you in that, right? Like Warren Buffett had that support. He did his partnerships in America, in the US. He did US, he did partnerships surrounded of US laws, okay? But what I'm saying is that the strategy is this, it's a fund. And then the person that manages the fund, which is myself in this case, for example, I manage how much leverage we use when we sell, when we rebuy, because sometimes we deleverage, so we go short in one of our investments, and that investment is good long term, but then it decreases in price. So I want to recover the short and recover that great investment at a lower price. Things like that are my responsibility. Diversifying, saying, okay, we have too much of this position. I know this investment is great, but we are too concentrated. Okay, let's diversify a little bit. Let me research to see if I find another investment that's good quality. So we diversify, right? That's my responsibility. So the fund manager, what he does is he grabs this catalog, creates a diversified package in the fund, or then, for example, it creates fund number 2 or fund number 5, which has like a stupid strategy where we only buy the best of the best in the catalog. And we see if we survive, always investing in one stock, okay? And we separate a little bit of our money, personal money, and we let it roll in that strategy, right? Always investing in the best idea, or make it less simple, 50% and 50% in the 2 best ideas, okay? The world of funds is like that because you can make many different strategies, right? So a fund has a strategy of when to buy, when to sell. If it has a tendency to hold and simply claim ownership on those shares in that business you're buying with the shares. Okay, if at this point you don't know that buying shares of a business is like buying ownership, I cannot help you because you're lacking the basics. Buying stock is buying ownership in a business. Okay, but I'm gonna finish this. So the fund manager, okay, grabs this catalog, creates a fund with it, and then it's your choice if you want to get into that fund, okay, or not. Many people in 1956, they met Warren Buffett. Warren Buffett had already his fund rolling. He offered them to get in. They say no. Okay. They lost turning $10,000 into millions. They lost the opportunity because they say no. Okay. So that's in the case the fund is already set it up. But what I'm trying to say is, what do you think I should do? I should open a catalog for you so you make decisions by yourself and I take a commission from that? Or I don't know, you give me something in exchange? Or isn't it smarter for me to do a fund? And even if you never buy from me, if I already have $1 million saved, okay, and my fund is doing great, without selling anything to anybody, just sitting at my computer and taking a good investment decision, I can make $1 million a year. The only thing I need is to save $1 million. I don't know if you start to get me. And I'm telling you about my psychology so you understand about the psychology of other fund managers. So then you understand how to work with them. Because if you don't understand how to work with them, there's going to be consequences. And of course your money is growing at lower rates, or you have to speculate and take risks to make the money grow. It's because you have bad relationships with the fund managers, okay? And the last thing before finishing is like, the fund manager, what he does is he grabs these investment ideas, okay, and makes the best package he can imagine, okay, or she can imagine, okay? So, the fund manager goes ahead, makes a diversified package, then usually the fund has letter to investors like myself, where they give you updates, where they keep a record of what are the returns. Of course, you want to invest in funds that have positive yearly returns. For example, Warren Buffett had an average 26%. I don't know if a little bit more after adding leverage he got for free from his insurance companies. Okay? But this way is much smarter. Catalog or fund? Of course, is fund the answer. Don't be so stupid. This is the message of the video, of expecting that the best stock ideas are gonna chase you with a salesman trying to show you a catalog, because perhaps that could happen, as it could never happen. It could never happen, right? So understand that perhaps you can find that service into funds, getting into funds. And the last message I want to give you and finish this video, because I don't want to make it too long. It's already quite long. Is you can find a fund that's already set it up, okay, and then you just deposit there, okay. They are gonna have a management fee and then a performance fee, okay. In case probably, they're not gonna give it to you for free. If they make an amazing return, they double your money. They're going to have, they will want to have a performance fee, a reward for that, okay. You can find a fund that's already set it up, send your money. Probably, if it has years of experience, they have already the SEC on them. They're only going to accept accredited investors and things like that. But then the important thing is to understand how to start a fund from scratch, because this is very important. If you want to start a fund with your friends, with your brother, like Warren Buffett did with family and all of that, there's a cost, okay? In the same way, when you buy a stock in your brokerage account, in your personal brokerage account, you start your position 0.05% down or 0.5% down, because the broker took a commission, okay? So if you sell your position in the next day, of course you're gonna sell at a loss because you had the broker commission, right? In the same way with funds, you need to pull a lot of money. This is why not everybody is doing this, despite it's so smart to do it. It's because you need a good amount of money before doing it. Because if we pull up, for example, $8,000, $10,000 with friends and families, we make a friend, family, and fools, I think is the name, right? You pull up $8,000 and you try to make a fund official with all the paperwork. After paying the lawyers, okay, perhaps you pay $4,000 in lawyers, or let's say you raise $20,000, you are gonna pay $10,000 in lawyers, so your fund is gonna start 50% down because of the lawyer fees. So you need the fund to double their money to catch up and break even, and only from there they can start growing and start having real returns. So the message of this is not telling you that it's impossible to do it. It's just telling you that usually what you need is to raise a lot of money, because if you raise $10 million, okay, and the lawyer fees is $10,000, you start to get me there, it's 1%, right? Yeah, 1%. It's like, no, it's even lower than that, 0.1%. So it's almost the same like a commission from the brokerage account. So when you get into the investments, you're going to start your investment being 0.1% down, because many people pull their money together, made a very nice fund of $10 million. They did all the paperwork, they arranged everything, and after everything was arranged, they transferred the money to the fund, right? And then when the fund bought itself into the investments, you are 0.1% down. So meaning that if the stocks go up 5%, in 2 weeks or in 2 months, the fund is already making money, and people can withdraw their money at a profit if they need it, okay? So this is the reason why people that have a network that can raise less than $15,000 or less than $50,000, they will never go and do a fund. It's because the lawyer fees are too intimidating, added to other factors, okay? But the lawyer fees make you start negative. Those people might feel attracted to start 30% up, in that case, just investing in a personal brokerage account and having more money to invest. So the important thing with funds, when you start them from zero, is that you need to pull up a substantial amount of money. So then when you pay the lawyers, the lawyer fees is insignificant, okay? And that's basically the message for today. And yes, showing a catalog could be more efficient because sometimes you don't want to go through the lawyer fees, right, and all of that, and just make commissions out of good ideas. So perhaps I could work in this setup, but I always choose not to do so because it's more smarter to just manage a fund, and that's it. So I hope that after this explanation you can understand what's going on, right? And the beautiful thing is that even if you decide, like many people did with Warren Buffett when he was 26, like myself, I'm going for 27, but yeah, I already have 2 years of fund track record, so it's kind of the same. I started 25. So if you say no to me, like many people say no to Warren Buffett, for example, the good news is that the lessons you learn on this video apply to any other fund manager you will get across, even those that you will say yes to, and you will want to work with them. Okay, this applies even for them. That's the good news. So the message is, don't expect them to go into this format and open a catalog for you like other salesmen do with normal products, with regular products that don't make you a lot of money. Okay, don't expect that. They're not gonna do that. And there's even, and I finished the video with this, there is even a conflict of interest. I don't want to make a catalog online showing all the investments I'm recommending to get in, because that will make those investments to get more expensive. I want to gain time to get myself cheap. And after that goes up in price, okay, and I don't want to buy it anymore because I have a new one that's cheap enough, perhaps on that moment, and I might not do it because I feel it's a bit dishonest, I will start promoting that stock. So people buy it at that higher price and help me to deplete the stock available, the stock selling in the public market, so the stock can skyrocket in price because there's no more supply, but there's still demand. I promote the stock so there's demand for the stock, but I help the supply to finish when the stock already went up and I already got that supply at a big discount. Okay, so the final message is, understand there's a conflict of interest. They're not gonna show you a catalog. A fund is always much better. So just go ahead and get into funds. That's the game. Get into funds. And don't wait for a salesman to show you a catalog, because that's never gonna happen. And if they show you a catalog, it's gonna be about things that make you win little money, or they make you just spend it instead of saving it and investing it. So thank you for watching and have a great evening. Goodbye.